The cash flow statement. What is that? Hey taxpayers, it's Tiffany Gonzalez, CPA here, founder and CEO of Accounting to Scale. And today we're talking about my favorite subject, cash. At Accounting to Scale, we understand that it's so important for a business to know, where did the cash go? So this, along with a balance sheet and a profit and loss, are the three financial statements we can give to business owners on a monthly basis so that they know exactly how their business is doing. Tracking and comparing these financial documents over time allows you to see trends in your business. It allows you to properly plan and feel secure about the decisions you're making. Make sure that you're receiving a profit and loss, balance sheet, and cash flow statement from your accounting firm. So let's get to it and start right at the beginning. Cash flow statement. What is that? The statement of cash flows, also known as the cash flow statement, summarizes the money coming into and out of the company. The cash flow statement measures how well a business is using its cash, how much cash is coming into the business to pay both its debt and obligations, as well as its recurring operating expenses. We look at a cash flow statement to determine the liquidity of a company. How much money does it have to be able to pay everything it needs to pay? The cash flow statement was actually added to the income statement and balance sheet as a full set of required documents from publicly traded companies back in 1987. The cash flow statement is different from the profit and loss and the balance sheet because the profit and loss and balance sheet account for income you might be receiving and bills you may have to pay. In other words, the cash flow statement does not account for accounts receivable and accounts payable. This is why when you look at your profit and loss, your net income is not related to how much cash you have in your business bank account. If you want to look at the cash you made and why it's not in your business bank account, you want to look at the cash flow statement. Even if you run your business on a cash basis, your net income might not be in your bank account because of distributions or investments in fixed assets. This is why it's so important you know how to read the cash flow statement. If you're a business owner that has been consistently confused about where your net income went and why it's not in your bank account, a really good bookkeeper can explain it to you. Call our office and we'd be happy to help you. If you want to know more about the balance sheet or the profit and loss, we have the video for you. Click on the cards here or click in the description below. There are three main components of the cash flow statement. The first one is the cash from operating activities. This is how much cash you generated from selling your product or service. The second is cash from investing. This is how much you spent or received from the sale of things like fixed assets, vehicles, office building, office furniture. And the third is cash from financing activities. This is where you receive loans, pay loans, take distributions. Simply put, the cash flow statement is a process of adding and removing non-cash items within these three main components to arrive at your net cash movement. So follow me as we go through this fictional company's cash flow statement. All right, so on your screen, you're going to see the cash flow statement for the year ended December 31st, 2019 for this example corporation. The first component is the operating activity. On their profit and loss, they have a $23,000 net income. There are a series of add backs for non-cash items, things like accounts receivable, accounts payable, depreciation. And it seems that there is a net $25,000 from operating activities. This means that the net income of $23,000 actually was all cash plus an additional $2,000. Moving on to the second component is the cash flow from investing activities. It appears that this company invested $28,000 into a capital expenditure. Likely they bought office furniture or maybe a business vehicle. It looks like they also sold some property and received $7,000 from that. So net of the second component, they have used $21,000 of the cash from the first component. And lastly, the third component is the cash flow from financing activities. It appears that this company took on $10,000 of long-term debt and then paid out some dividends and repurchased some stock, so that a net $3,000 cash was used in financing activities. So when we take the net cash provided by operating, reduce it by the net cash used in investing and financing activities, we actually get a net increase in cash of $1,000. The cash at the beginning of the year for this company was $1,200. When you add the net increase in cash of $1,000 that was provided by all of these activities, you end the year with a cash of $2,200. All right, so let's take a quick step back for a second here. It appears that although this company generated close to $25,000 in cash from its main business, it then used that cash to make a very large purchase and pay out dividends. Without taking out debt and selling the property, they wouldn't have been able to do that. So, in other words, this is why you might see a net income on a profit and loss of approximately $20,000, but then look at the balance sheet and see only $2,200 of cash. The cash flow statement is telling us that this business is profitable. While it doesn't have that much money in the bank, it's because it invested it into a very large capital expense and took some distributions for the owner. As you can see, it's natural for a business owner to be scratching their head and saying, I made all this money. Why is it not in my business bank account? This is why it's so important you know how to read the cash flow statement. And if you're still not sure how, hire a great bookkeeping company like us, and we can help guide you through that process. If you absolutely love this video, please hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook. We hope you enjoyed this latest installment of What Is That? If you have any suggestions for financial terms, please leave them in the comments below. We love your suggestions. Until the next video, your favorite CPA, Tiffany Gonzalez.